Is the market in full-blown panic mode, or is this just profit taking in preparation for a larger bull market rally? Let's talk about it. So for a lot of people who just check on the indexes and don't follow the market closely, today probably looks like a nothing burger. S&P isn't even down a full percent. But if you're like a lot of people who are piled into tech right now, today was an absolute bloodbath, with Tesla leading the way to the downside, down almost 10% today after an earnings report that a lot of people, especially on the social medias, is saying isn't that bad. If you follow me on Twitter, you got a much different story. As I was posting all morning about how bad this market looked, how I was bewildered on why people were not buying more puts, why people were not talking about how bearish the market looks right now. And we bought Tesla puts all day long, and Nvidia puts as well. I was short both of these companies. I'll talk about Nvidia in just a moment, but I do want to focus on Tesla because there's a few things here that I think people are not focused on, and they probably should be. Tesla is cutting their margins and lowering prices to chase market saturation. What I mean by that is they're trying to dominate the EV industry by lowering their prices, which then cuts their margins. Now, this is a strategy that historically actually doesn't usually work very well. Very rarely is this a successful strategy. Now, I think Tesla will be a successful company at the end of the day, but it is going to raise some concerns among investors. And you're, of course, also likely going to see some natural profit taking at the current evaluation that Tesla is at. Down 10%, though, means there's probably something else going on here. And another hint, the pain to come is what we just saw Ford do, which was securing a $9.2 billion loan from the government to help build EV battery factories. Now, a lot of people are drawing a correlation to this, though, with back in 2007 when we saw a similar headline that Ford had actually put up some of its assets for collateral to get $18 billion from the banks. Now, the timing of this was actually right before 2008, the great financial crisis, and is actually the reason why Ford was the only American automaker that didn't have to get a government bailout. It was because before banks started tightening their loan agreements, Ford got ahead of it and took out a massive loan that helped them weather the storm. And lots of people are seeing Ford getting anxious to take out big loans for future projects and saying this might be what they're seeing once again, because they've shown to have good foresight. Meanwhile, if we look at Tesla, they're continuing to ramp up their spending in research and development. Almost $1 billion last quarter to continue that production. And if we also are aware of the debt wall coming up in 2024, where a lot of companies, especially those who are not profitable and have large debts, are going to have to refinance at a much higher interest rate, this could become problematic. Now, I don't want to get too deep on the debt wall on this weekly report, because on the podcast that comes out tomorrow, we're going to do a dive into that with an analyst and another day trader as well. But it's going to be an issue for Tesla. Not as much for Tesla as many other smaller companies, such as Roku, which is actually a position that I definitely lightened up and cut my options on. But it is something you could consider. Now, the market is likely not considering this, because if you look at how the year's gone, this market hasn't looked more than 3 months ahead of where we're at right now. Definitely not at what's going to be happening in 2024, a full 5 months ahead of time. I don't think this market has that type of foresight right now. So even when I look at Tesla stock, I can see that we've reached one of our major Fibonacci levels. If we look at the 1 minute chart, we can see in the after hours, we're actually breaking that level. Let's see how things look tomorrow. See if this is going to be where we bounce or if we continue to bleed. If we continue to bleed from here, I'm going to be looking for 240. It's quite the drop for Tesla. However, after that pullback, look for 380 on Tesla. That's a big move to the upside. And I think we could see a similar trend with a lot of other stocks heading into the end of the year. Nvidia is another name that was getting big sell-offs today, but a much different story. Now, there's a few pieces to this story that don't directly involve Nvidia, but still exist in the same sector. And that starts with TSM having their earnings this morning, where they actually lowered guidance. This is a much different story than what Nvidia said in their last earnings call, which was that they were going to have this phenomenal, crazy demand. They said the word AI like 300 times or something. And we're talking about how it was going to be fantastic. But now it seems all a bit exaggerated when we listen to TSM's earnings call, which makes people think, okay, one of these companies exaggerated on the amount of demand, and it's probably not the one that caused its own stock to tumble. So that's in the big warning sign for NVIDIA. And then when you're looking for overall market sentiment, you could look at a company like SMCI, Supermicro Computer, who just said that they actually guided up. They've been doing great. They've had great sales. This company, if you go out to a weekly chart, they've had a phenomenal year, up 300%. And yet today, after what was good news, no buyers. Stock ended in the red. There's no buyers on great news from a great company. It's likely because buyers are getting exhausted and they're starting to get antsy about buying elevated prices like this. This was why I was all over Twitter today saying, why are people not getting short? Look at these signals. These signals say sell, sell, sell. Or if you're an option trader, buy, buy, buy all the puts, buy them up. Now, when it comes to NVIDIA, when I look at this chart on the daily still looks like it's holding up. The RSI is rolling over. If we look at the 1 hour, though, we see a different story. We're definitely still seeing some more momentum to the downside. We're just below what might be considered an oversold RSI, and I think the stock could head lower. I bet on the MACD you would see some more turnover, highlighting a further downside on this stock. 4 hour, again, looking very, very bearish here. I would be looking at these Fibonacci levels for maybe a visit all the way down to 387. Now, first, I would look for that 430 break. Make sure we're looking for that 430 break. The way this market's been, if this thing gets down to 430, maybe people just panic into it and buy it up anyway. But if we really span out for this chart, we look at a monthly chart back all the way to 1999 and we do some Elliott wave analysis, I would say in the next few years, NVIDIA could go all the way to 539. So if you're a long-term investor, I mean, this still looks great. But I want to reiterate, what we heard from TSM and their earnings is likely to be similar to what we hear from NVIDIA on their upcoming earnings late August. So I'll be likely trying to trace some lottos into that, and I already have some longer dated puts on NVIDIA. Now it could chop sideways until then. Maybe it consolidates. Maybe we get a bigger sell-off. Either way, I want to have some downside sentiment towards that stock. Another one that I set up today was actually Alpha here. Carvana. This was a really interesting story that played out this week with them announcing that they're going to bring out their earnings early. Likely because of the short squeeze that was already occurring. They wanted to squeeze the shorts even harder by announcing their earnings early when it was a good earnings considering how bad off the stock is. And it did, in fact, cause it to squeeze even higher. However, I think that was the last bullet in the gun. And so I'm willing to buy some puts here and speculate that this stock is going to come back down to a much more reasonable valuation. As you can see, for the path of this stock has been absolutely crazy. And I think that they're much more reasonable back down to $20. So about a 50% drop in the stock. And we'll definitely give these some time and be cautious of the implied volatility if you decide to trade it with options. And remember, if you're into selling options, that's a great stock to sell calls on. I think Coinbase is another one that's great to sell calls on. I was talking to another day trader today who said you could sell $60 out of the money and still get $4 a contract. For people who don't understand the terminology, that means you're getting paid $400 to bet that the stock will not raise another 50% from its current valuation. And that's a pretty good bet to take. Now, that said, we also have seen lots of news reports this week that many institutions are filing for new Bitcoin ETFs or Bitcoin trusts. They want more exposure to Bitcoin. And if we see the SEC start to approve a bunch of those, which I think they're inclined not to for political reasons, we could see massive buying in Bitcoin, which causes stocks like Coinbase to go absolutely parabolic, and then 160 might be a possibility. So remember, there's no free money in this market. There's always some risk. So for the short positions I have on Coinbase, that is definitely something I'm being cautious of. If I see that headline hit, I am going to panic out of those positions as fast as possible. So that's going to be it for this weekly report. Make sure you're subscribed to the channel and you ring that bell, because tomorrow we have a fire podcast coming out. We just finished. It's was 2 hours long, which is why I'm lacking some energy right now because I am pretty tired. I've been talking a whole lot today and putting out a lot of content, but I hope you enjoy it. Remember, if you want to talk to me more or you want to hear about the other plays that I have set up, because I simply do not have enough time to talk about all of them on every weekly report, you can always join the Discord. It's free to join and the link down below. For now, that'll be it.